Financial markets are trading cautiously this week. Traders are sitting on the sidelines of the Federal Reserve's policy meeting. The rate-setting committee is widely expected to raise the official funds rate. Apart from this crucial event, markets are monitoring geopolitical events in East Europe. Watch this video to find out about market sentiment prevailing in the New York trade today. The US Central Bank is likely to increase the key interest rate at least by 25 basis points. Even a modest rate hike is extremely bearish for the US stock market. Lately, the S&P 500 used to settle at historic highs. At present, the index has retraced 14% downwards from the recent peaks. Nevertheless, today on March 15, the S&P 500 is trading cautiously higher in light of US factory inflation data. The index is growing, making efforts to break through resistance at 4,200 points. It's expected to climb above resistance and settle higher, heading for 4,250 points. According to the report on US factory inflation, producer prices rose by 0.8% in February month-on-month, undershooting the forecast of a 1% increase. This information encourages traders because a slowdown in factory inflation prefaces the fact of easing consumer inflation. Nevertheless, the market is alarmed by harsh sanctions on one of the largest participants in the global trade, thus putting pressure on the global economic growth. Sanctions on Russia will entail risks that could cripple the whole global economy. The survey by ZEF experts reveals bitter disappointment and mounting pessimism among entrepreneurs in Germany. The report looks at the weakest business sentiment index since March 2020, when the COVID pandemic was acknowledged worldwide. Notably, the index stumbled at the sharpest pace since the ZEF think tank began its race. This information mirrors dismal prospects of the global economy in the short term. No wonder, amid such turmoil, investors hurry up to revise their portfolios in favor of safe haven assets, including the US dollar. Of course, traders want to play safe. The US dollar index that measures the greenback strength against the basket of 6 major currencies has got stuck in a range at around 98.75. The index will hardly make abrupt moves in the run-up to policy statements of the Federal Reserve. The market has already priced in a rate hike of 25 basis points. However, in case the actual rate hike is increased higher by 50 basis points, the US dollar will advance in response. The Canadian dollar is trading today irrelevant to the oil market. While oil prices are retracing back to previous levels after a spike 2 weeks ago, the USD CAD pair is trading lower. However, technical experts foresee further growth of the current pair. They predict that following a brief downward retracement, the USD CAD pair will climb again with a target at 1.2956. Crypto traders are even more cautious, posing for thought. The European Union countries refrained from banning crypto mining across the EU territory. Oddly enough, the news did not bring back the bulls to the market. Bitcoin is still trading in a tight range at around $39,000 per token. Perhaps the market will trade more actively tomorrow and develop some trendy moves. And that's all for today. Trade at a profit with InstaForex, and see you tomorrow.